Hi dear traders and investors, today is Tuesday, December 13. I'm happy to share a regular market review prepared for InstaForex. Today is a crucial day for the currency market. The US inflation data will be on tap at 13:30 Greenwich Mean Time. Now, I'd like to show you realistic scenarios of market moves after the publication of these data. Let's discuss these scenarios on the trading platform. The first instrument to discuss is gold. Dear friends, I've found spots on the chart to show you how the market responded to inflation data in the last few months. You can also find the dates of the inflation data for the last 1,000 years and plot the dates on the chart. For example, you may puzzle out what volatility will be triggered today. On August 19, the CPI launched a bullish trend in gold. Volatility was wild, about 2,000 points. The next inflation data was released on September 13. The gold price stretched 3,000 points in 1 hour. Then the price slumped. The next time was October 13. Gold crashed after the report and recovered in a few weeks. Volatility was 3,600 points. Then, on November 10, gold price stretched again almost 4,000 points. Now, gold is consolidating. I have an ambitious plan for a steep fall. Everybody believes that inflation will be lower than in last month. Hence, Powell will not raise interest rates aggressively. The actual CPI might not go down. Previously, the PPI was higher than expected. The same is about the unemployment rate. If inflation is stronger than expected, we will see a large black candlestick. Market makers could first push the price up. Nobody will enter the market and then the price will tumble. Be ready that the inflation data could hit a nerve. I have two scenarios for the euro-dollar pair. The first one is based on the fact that the buying impulse has already been wrecked. It happened yesterday and the pair came under selling pressure. Traders working on a trend reversal have already earned some money. I see several nice targets, for example a low of December 2 which coincides with the non-farm payrolls. There are few lows which have not been hit yet. There's plenty of money which market makers are eager to grab. The first plan is to go short from the levels of a trend reversal. We could either close positions at a break-even or at a stop loss. The second plan is first a spike. We go short at a higher high with the aim of hitting all untouched lows. It looks crazy. Traders bought the pair at lows after the non-farm payrolls or after the PPI. These lows have not been broken yet. I guess the puzzle will be solved today. The euro-dollar is still trading at the levels of a trend reversal. Someone has taken advantage. The pound-dollar pair also has left several untouched levels. The low of December 9 after the PPI is likely to be taken out soon. Again, market makers allow traders to buy the pound. The currency pair is sure to drop today. The question is whether it will fall immediately or after a spike. The dollar-yen pair is going up as expected, fulfilling my trading plan. My big plan consists of three waves. From deep lows, the instrument leapt up rapidly. Then the price made a 50% Fibonacci retracement. Wave A has already been over. So we should have fixed profits. The US dollar is likely to assert strength today after the CPI report. Why do we expect high volatility today? Because the US Fed will make an interest rate decision tomorrow. So based on CPI available today, traders will make forecasts of a rate hike. Powell is certainly aware what CPI will be unveiled today. That's all I wanted to say you today. See you later.